What's up, everybody? Happy Friday. Hope everyone's having a good day. A lot to cover in the markets today as usual. Another big hack. Cristiano Ronaldo signing an NFT deal with Binance, and more news with Three Arrows Capital. So don't forget the like and subscribe button. And follow me on Twitter at BenCryptoShow. Let's begin. So yesterday I did my new altcoin pick, XCAD Network, a watch to earn coin. You can earn points as a YouTube creator making videos. You can earn coins, earn points just watching YouTube videos. Appears to be a huge hit. So the video got about normal with my number of page views and all that stuff. But the Twitter post I put up of it was much more than any other tweet I've ever had. About 8,000 total impressions. Previous to this, the tweet I had with the most impressions is only 2,000. So this is my biggest tweet by 4 times. Appears that a lot of the traction, comments, that stuff, again, comes from Asia, the India region. That's where the coin's big following, where a lot of their main influencers, YouTube influencers, have signed up already. So I'm excited about it. A lot of traction, especially in the Asia and India region. They just did their New York launch last week. It's exciting. I think everybody should invest in it. Sam Bankman-Fried, feel free. I know you're sitting on that $2 billion in stable coins. You might want to diversify, throw into some altcoins. Who knows? I also had a good call this morning with another earnings coin, D Hotels DAO. They are going to be launching in a few months. Great conversation with the two founders. It's also in the earnings ecosystem. You can earn points doing fractional ownership of a hotel. You can earn points, earn coins by staying in the hotel. I'm going to do a further deep dive on that project next week. But earnings coins are definitely the ecosystem, the sector that I'm most bullish on going forward. Let's move on to the news for the day. So Cristiano Ronaldo signs an NFT marketing deal with Binance. Multi-year deal, produce a range of NFT collections over the next few years. It's pretty cool. So this looks like Binance's strategy to it looks like a more cost-effective sports marketing strategy as opposed to the stadium deals, stadium sponsorships. Might be what they're going for here. They didn't give a price tag on this, but it's almost certainly less than a huge $100 million stadium sponsorship deal, naming rights deal. Good for them. The Binance was up about, I think, 5-6% on the day, a little bit above market. The market was pretty much flat on the day. Let's move on. Another hack. So I didn't really get into the details of this one yet. So I haven't read about it, but Harmony, their Horizon bridge that connects Ethereum coins, Binance chain coins, and Bitcoins. That means you can send those coins that are on different blockchains from one blockchain to the other without actually converting the coins. So this is where a lot of the hacks have happened on these bridges. It appears to be a security vulnerability. But yeah, this is a $100 million hack. We haven't heard not too many hacks in the last month or two. It's been kind of quiet with the market downturn. I guess hackers they kind of go into hibernation too during market downturns. Who knows? But maybe I'll look into that one and go into further detail next week. Moving on, so ProShares, so a Bitcoin short spot ETF has been, not spot, just a short ETF has been initiated. So now we have pretty much everything except the Bitcoin spot ETF in the US, and the spot ETF in Canada, Australia. There are the futures ETFs, and now we have a short ETF here. But yeah, I get the ETF, they're getting more and more popular as each week goes by. So the second day, it's in the US, not in Canada, the second day to $35 million in trading volumes. That's pretty good. Day 2, $35 million. This is good. So I think that's pretty, at this point, it's only a matter of time before the spot ETF for Bitcoin comes out. Obviously, the one in Canada has been getting a lot of attention since the mainstream whale, North American whale, probably based in the U.S., sold $500 million last Friday, which that triggered the second downfall. That didn't trigger the fall from last week, from 2 weekends ago at Consensus, but it did trigger the fall last week. So, but I kind of argue that's more of the only bad publicity is no publicity. It wasn't a technical glitch or anything. It's just, the investor mindsets in the spot ETFs, they're slightly more risk averse, a little more conservative. So that's something to watch for going forward. They might have a slight increased penchant for panic selling, which that 500 million sale seemed to be. Who knows? But yeah, I put up a little flow chart of the negative market movement since the Terra incident. Everything seems to stem from the Terra implosion. So that seemed, remember the market was at 30,000, pretty flat for quite a while right before Terra. It looked like it was going to be staying there. Appears just the implosion element going to zero really kind of played into people's minds, into investors' minds. It was just kind of lingering there. And then that, it looks like then we had the interest rate hike, the Celsius incident, and then consensus fatigue. A lot of tweeting going on in consensus. So that all kind of combined to have the first market downturn. There wasn't one specific big sell or liquidation. It appears that there was just a bunch of individual sales right during specifically the Celsius incident and the interest rate hike. So I say it all stems from Terra because the interest rate hike the month before did not really have an effect on the market. It went down marginally, like 1% the day the rate was announced. But the interest rate hikes before had a big effect on it. So it looked like before that, the decoupling, the equities markets, crypto markets were not really moving in line with each other anymore, which was a good thing. And then they all of a sudden just started to with the interest rate hikes, I would argue. Since it didn't affect it the month before, it was more so the Terra effect playing in people's minds, and then investors just having slight jitters way more than they did a month before the Terra incident had even happened. So then that obviously led to panic selling, all that stuff. And then that led to hedge funds with very having not good years. Maybe they were also involved in Terra and Solana and all that, like Three Arrows Capital. So them, and that all this led to them placing high risk, highly leveraged directional bets on which direction Bitcoin was going to go in, which is obviously very risky, especially when the market is moving down to begin with. Those bets did not pay off. As last week, the Purpose Fund, the whale on the Canadian spot BTF, he just kind of sold randomly at a panic sell, so then that triggered the further Three Arrows liquidation, and then that triggered the Voyager BlockFi having some liquidity issues, but that's sort of workable. This is just sort of a flow chart I made here, playing things out, but it all does seem to stem from the Terra impact and just fear playing in investors' minds, which wasn't there the month before. But yeah, tying in with the consensus fatigue. So the good news is that there was a conference last week, which did not seem to have a negative effect on the markets at all. The only complaints here were just some ratio complaints. Parties, just too many dudes, too much of a sausage fest. Looks that way to me. I mean, this girl's got every right to complain about that. I agree here. It's more balanced ratios people needed. That was pretty much the gist of any complaints or whatnot there, which is good. Nothing that had an effect on the market. So this is good. Big conference going forward. No panic tweeting. And we're all good. Then Vitalik put up this stuff about 3 Arrows Capital here. So he's not a fan of any sort of financial models that predict specific price movements, and prices can peak at this, or they can't go down more than this. I'd have to agree with Vitalik. He's not a fan of the stock to flow model. It's one of those models that predicts a $500,000 Bitcoin. Any sort of model that has a specific endpoint, I just feel like they get too much attention. Too many big Twitter followings from the people who create those models. You know, Suzu, I think is his name. He's the founder of 3 Arrows Capital. He did have one of these models here, the super, whatever it was called, the super cycle theory, I think. Yeah, predicted that Bitcoin might go up to 2.5 million one day. It was not going to ever have another drawdown of 80% during a bear market when it's already had 2 drawdowns in Bitcoin's 10-year history. You wonder, the huge Twitter followings, 566,000, that's like a lot of Twitter followings. Did this maybe play into some overconfidence in his model? I mean, there's a lot of people that have like 50,000, 100,000 followers, and you get to this range here, 500,000 more, then it's like huge following. So did this maybe play into overconfidence with his model? I don't know, but I guess, I didn't know this. Vitalik tweeted, I guess Suzu, he had a habit of renting super yachts and taking potential investors on super yachts to try to lure them in. I mean, let's see, and I guess he used the borrow capital, so the way he was making highly leveraged bets, and then you borrow capital to make those bets. He also borrowed capital to rent out the super yachts to try to gain investor funds, which apparently it worked. He was able to raise a lot of capital for it. Who knows? But yeah, I'd have to agree with Vitalik. I'm not a fan of specific pricing models that have specific price points it can or cannot reach to, specific drawdowns or market gains that the market can or cannot reach to during bull or bear markets. Not a fan of those at all myself, and that kind of led to overconfidence in those theories is what seemed to be Three Arrows Capital downfall here. That's all for today. No videos this weekend as usual, and then I will be back on Monday with a new video. Everyone have a good weekend. Catch you later.